Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks, and I'm here with another video. And this time, this video relates to Happiest Minds technology, and it has come out with decent set of numbers. But I'll discuss as to why the stock is down, 2 3 points as to why the stock is down from its, you can say, highs and the 52-week and all-time highs, and what lies ahead for the company. So we'll discuss about that. Let's get started. First of all, a disclaimer that I'm not this is not a stock recommendation, and whatever I discuss is purely for educational purposes. And I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. These all will be my personal opinion. This is only for educational purposes. Whatever I have understood over the last 10, 11 years, 12 years in the market, I'm discussing that with you, and I'm trying to impart that knowledge, whatever I have learned over the years, to you. So whatever financial decision you take, kindly take that on your own judgment, and kindly consult your financial advisor before taking any calls. So before I talk about Happiest Minds, a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. Also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me, and we can work things out with a fee. And also, if you cannot pay on Patreon, you can become a member on YouTube by clicking on the join button, or you can become a member on WhatsApp by emailing me, and you'll get all the benefits of Patreon there. Now let me take you to the screener website, and we'll discuss about Happiest Minds. So basically, Happiest Minds technology is in the IT domain, and this is a very special IT company that is into, you can say, new age businesses such as tech, and their major business comes from education technology, and that would tell you as to why the stock has not performed that well. So if we look in details, the company offers IPs and a domain, you can say, enterprise across a sea of focused areas that include digital transformation and enterprise solutions, product engineering. You have infrastructure management, security testing, and consulting in the solution space. The focus area security, M2M, and mobility solutions. Additionally, company is an authorized partner with global information technology players to deploy their services and create custom solutions. So basically, their business units are product engineering services, PES, digital business services, which are into the education technology domain, and infrastructure management and security services that they provide across the board. Some of the solutions offered by Happiest Minds are AP Price. We have digital assistance selling platforms, a DASP, Data Excel. We have location mobile, personalized, and integrated security as a service, that is SaaS. Now SaaS is a kind of business that in mid cap and small cap IT very few companies are providing, which they are doing. And basically they are into unique businesses and clientele, which are decent in nature and have been long standing, you can say, have been in long standing relationship with the company. So they are into automotive, banking, consumer packaging goods, e-commerce, education, publishing, manufacturing, retail, travel, and hospitality. So basically, their ad tech business has not done that well, and that was the major reason why the company has produced lower, you can say, margins and you can say growth compared to what they were doing in 2020 and 2021 post the pandemic. Things have not looked great for the company, as they were more into infrastructure and you can say uh, work from home kind of culture, kind of business that they are mostly into. And now you can say margins and profitability and revenue has probably stabilized, and that is where this is where the company may just end up being around 20 25%, 18 to 25% kind of margins, and all those kind of things that they are producing at the moment. uh, uh, in terms of international presence, the company has you can say businesses in United States of America, UK, Australia, Canada, Netherlands, Singapore, Malaysia, as well as Dubai. In FY22, company made a strategic investment into a Tech4TH, a consulting, you can say, led technology service company that exclusively focuses on the travel and hospitality domain. So they are trying to expand into it. Their major kind of business comes from education technology, and they want to get into travel and tourism as well. So their major revenue breakup is company generates revenue from a contract with customers which consistent of infrastructure management and security services, which is 22%. Digital business services, as I mentioned, which includes tech, is around 30%. Product engineering is around 48%. In terms of their geographical split, company right now generated revenue from exports. Around 81% of their revenue comes from export, and this is the second reason why the stock has not performed that well, because most of the businesses that comes from UK and United States have got affected over the last 1 year, and most of these companies have not performed that well. Why I am bringing this video on Happiest Minds is because this is the time to probably from a long-term basis accumulate the stock altogether. Digital business services is 23% and product engineering is around 44% of the business. In terms of country-wise revenue segregation, we have India 19%, America has a contribution of 65%, UK 10%, and others 6%. So most of their business comes from US, and we are seeing the kind of economic, you can say, situation in US, which is not that feasible for companies which are right now working in there, especially export oriented companies like India or countries like India. So altogether, if you look at the numbers, the market cap of the company is on 13,000 crores. So it is a, you can say, a small cap IT firm that we are looking at. It has come down from around 1600 levels all the way to 880 now. It has come up from the lows, and the numbers were decent this time around, but currently it is trading at a PE of 60, which is still expensive in my opinion, although the ROE of the company is around 29, and normally if a consistent ROE, any consistent ROE of company, the company normally trades double that. So probably around 58-60 is the peak PE that the company currently can trade at. In terms of numbers, if you look at it, quarterly numbers in the March quarter, on the you can say, if you see the March quarter numbers, we have a situation where they produced 378 crores of sales versus 301 crore, which is pretty decent, you can say, rise of 25%. Operating profit of 92 crores versus 72 crores was jump of 30%, and the margins remain stable at 24%. So what has happened is that I think the margins are bottoming out around here, 23-24%, and if it remains there, I think the company will end up doing extremely well in FY24 and FY25. Overall, in terms of profitability, although they did around 58 crores versus 52 crores, so that's a jump of only 10%, but you got to understand that there was a major portion of interest burden this time around because of the expansion and acquisition of some of the smaller companies in different domains. So they had an interest burden of 9 crores, and we have a depreciation that was 13 crores versus last year's of 9 crores. So that is what has eaten into, you can say, operating profit, and eventually profit before tax came out to be around 79 crores, whereas it could have been that the profit before tax could have been much bigger, somewhere in the region of 86-87 crores. So eventually we have a situation where they paid lesser taxes in March. If you look at it here, they paid taxes of around 25%, and this time around they paid 27%. Eventually net profit was not that great, but operationally they did extremely well this time around with a near 30% growth altogether. So for the year they did 1070 crores of sales, and if you look at it here, year on year, in March 19 they did 600 crores, March 20 it was 700, March 21 it was 770, March 22 it was 1100, and this was the jump from 21 to 22 that really triggered a major run up in the stock, and the stock moved from around 7 800 all the way to 1600, but now it's back to 800 880, and this time around the growth has been around 25 28% on a consolidated year on year business. So I think the margins as well as you can say numbers are bottoming out now, and things could look upward from second quarter onwards. Going forward, if you look at the shareholding pattern, promoters hold around 53% of the stakes. FII have 4%, and it has reduced from around 7% earlier. I mean, somewhere around 1.5 years back. DIIs hold around 1.3%, again has reduced from around 7 8% some 2 years back. And and it is the public shareholding that has increased significantly. At this point of time, I feel that in terms of the charts, I'll discuss about the charts, but overall I feel that if you get a chance to buy it around 850 840, those will be very decent levels on slight declines. But this is a long term play, the business per se and everything. It looks like that the company under Mr. Ashok Soota could go ahead and become a mid cap IT company over the next 6 to 8 years. So that is where I believe that the move lies. It is not that in the next 6 months it could go do wonders, but I feel over the next 5 6 years the company could appreciably appreciate in terms of market cap. So that is about Happiest Minds. Let's look at the charts and have an idea of where the stock lies. So stock is around 880, and if you see here, it consolidated. In fact, in the last 3 months it has moved all the way from around 780 levels post the results to as much as I think around 9 10, and is trying to move up ahead. So if one can get a chance, one can start accumulating here and buy more on dips at around 840 830 levels. I don't see 800 being broken so easily. If you look at it here post the result, this was the move from 825 to 890. So I think 820 to 850 would be very good region to accumulate the stock even from a long term point of view, and one can start buying here, and probably over the next 4 5 years can generate returns at more than 15 17% CAGR. I think the stock should do well from here on in, but the fact remains that the numbers need to continue to be better. So what you need to do here is that you have to keep a vigil on quarter numbers, and if they continue to be strong, then continue to hold, otherwise keep a 10 15% stop loss on the stock. So this was my video on Happiest Minds. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.